Don't know what happened there. You know, hey Bitu. Yeah, I just stopped the stream just now there. Don't know what the hell went wrong. Yeah. Right, it shows us okay. Why is this showing us offline? Don't know. But it's YouTube, I think. Right, so what we did have, yeah, so your oil looking good. Looking to get locked in on the initial short here at 20. As a day trader, we look at different stuff. We're trading long terms, futures and stuff might not be your range stuff. Um, but about the chat here. Alright, so where all that looking there? Don't know.
Order filled.
Alright, got filled on the 20. He sold 2 contracts off the 20. Looking through the fade through the news. Think we reach our level. We identified that 20 that 20 to 40 area as an inflection point for today. Looking for retest of the open as the initial, and on the ES we 3 minutes away from the ES. We could always get pushed through and come back down. On the ES side, we have buys at 71 and 69, sell at 91s for the test. What we're looking at is major inflection points. We turned this yesterday, sell into a buy overnight and got in and out of the market pretty well, pretty safe. So we're looking for that. We're looking at first entry, second entries right here at that 30 would be your best entry on the market at the open. Looking for that 10 a.m. trade. You may get flushed, but we don't see it flushing this early in the market. So last night on ES was why we labeled this deja vu. You can see the opening just pushed out. That's what the market been doing for the last couple of weeks on the overnight, especially at the all-time highs. It was pretty easy trade this morning right there for the London, just before the London session. Got in at 9p on the point of control from yesterday. So you can go to default chart. Boom. Right there. So Tesla should be acting together with the market today. So we're not too interested. We just holding our trade on that. We don't see any big inflection points of that until probably April. So we'll just monitor it until April month on what we've got. Don't know if this live stream showing up at all in programs. Probably some technical stuff. Yeah, I don't see why. Twitter, live or channel, whatever. Yeah, something wrong with my YouTube stuff. Yeah, Twitter, bye. That's weird. Yeah, something's up with this. So you can see right now we just got clipped right there. We in 2 contracts. We're looking at executing buyback. So you have 25 points, so your buyback would be, or your first exit would be at 54. You just want to execute a quick fade this morning and then look for that exit out on the secondary trading through news. We now going to open, so market will react how it wants. We're looking at buying 70, selling at 91. We expect the market to be a little bit bullish from the news, but let the market do what it wants to do. Bam, bam, bam. Back up the settlement, sell at 90 to 91. We have a sell right here located at 91. Yeah, don't know what is what just now happened there. Those are somebody infected this computer, I guess. I'll be pissed. Technology this morning, technology. Worst thing ever at some point. So we sold so oil at 20. We are looking for the kill zone, 20 to 40 kill zone achieved, looking for 54s. If you're looking at look for the view have to be reactive. There's a reason for that. Let me show you what we were looking at. I wonder what we're doing on the open this morning. Most likely it might be following the market. Yep, that's not too worry for me. So let's see. Crude oil. Open link and that. Yeah, technology looks like it's wacky this morning. So what we did do is go short on crude. There's a reason why we went short on crude. We looked at the API number from last night. We saw the inflection. You could see the inflection back from that 53.50 last night, which we identified yesterday. We got some money off for that. It wasn't that bad. Right, so you can see the identified points here. You can see where that 54.36 is. You can see where this low node is. This is a 1 hour chart. You can see the gap where we think the gap would be tight enough. So that's why we have the 20 with the 40 area labeled. That is inflection target. We had that as an inflection target. 54 was our option, so we got 50s to 54 as our option spread. On the long term, that is your 90-day option. So that successfully completed. So that's why we're looking to be short. We look at the API, we look at that, we know where our most logical move was, build our band, build exactly where we have it, look for structure, look for that gap, look for the fill. So that's why we know there would be more than likely an inflection point in that area, so that we have 20s and 50s and 40s listed there. More or less we have a pylon. We do pylons on certain high probability trades like that. On the ES side, we looked at, if you was in the conversation yesterday, we looked at on the evening or the coaching, you would see I was asked a specific question of where you would hold your stops if you're selling at all-time high at 92. That a reason I was looking at a 92, which is my interpretation of volume is a bit different from Top Step. So I saw what the volume was doing. I looked at the logical play. logical play was for push to that 92, retest that 92, and made something like a head and shoulders on it. We could see what the flush looked like on overnight right there. We had a simple execution entry, so the POC at 90, make sure your stops are out there. We sold the 92 on micros, sold the 90s on had to go to our asset. Wake up this morning, saw profits on live mechanical trade, purely mechanical trade, knowing exactly what the market wasn't looking at. So you have your opening range here on your 5-minute chart. You want to see that test of that VWAP push down to that 69.71. If it does start getting bloody, we already short on oil, so why we having dice Twitter on this stupidness? Yeah, right. So we have this area here listed, so this is what we're looking at here. You can see we have confluence, deviation, pointer controls, values, kill zone. So we're looking to sell 90s, buy 71s and 69s, let the market achieve what it wants. Don't rush the market, let oil do what it wants on this side. If it finds support, it finds support. We got in at 20s on the initial. We do have a list at 36 for an entry to get the perfect entry in. That is most of our loaded right there at 35s. Looking for that 2 tick entry, but we already have some load at today's EIA. So trade what you see, trade small, trade smart. That 20 to 40 area would be inflective today in our opinion. So we have that 35 set up for the EIA itself for that push to the point to fill that area. And so we do have buy here, sell there. Want to see that that's right here of this value. Anyway, within this zone here, we're not doing ready settlements. We're looking at I hate this. This is what kills me with this charting system. So let it doji up itself. If it does doji, we're looking for volume. Volume sucked yesterday, which kind of gave us a key of what we wanted to be short-term short. Doom, 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 doom. Got locked in the 20, searching for that 54. They'll have primary exit and let the secondary run versus the actual trade that's on. Waiting for it to take profit to fill. Buy, we didn't get through this. That person probably too late on the order book or something went wrong. Filled on one of the live. I did get filled on all the chain is weird on this demo account, but I did get filled on the TP. Now checking it back to make sure. Yeah, I only have one contract remaining on that. Don't know. I know my live code from 54 flat too. Or if you're trading on demo is you always punish yourself one tick on the side.